Fantastic. All right, afternoon all. Broadcast number 2. Just waiting for a couple more people to jump on board at the moment. But look, like anything, we've got a little question and answer panel on the right-hand side, which you should be able to access. And basically, if you've got any questions about today's topics, please just chuck them in there, and we will get to them at the end. Look, interesting little schedule for us today. We had huge success on the first broadcast that we did a couple of weeks ago, which was mainly focusing on the wage subsidy, what that meant, and a few other elements of the environment, things like the mortgage holidays, commercial leases, and all those sorts of things that we covered off, and we got some really, really positive feedback from the information that we brought to the table. So we had actually, as a result, we had a bunch of clients saying to us, hey, look, surely something must have changed you. Can you do another broadcast on this? And so what we've done is we've kind of put together a little bit of information that I'd thought about trying to get out last week. However, when they announced that they were going to discuss the alert level yesterday afternoon, being Monday, I thought it was best to wait till that announcement was made to get a bit of an understanding about how that was likely to affect business. So look, a lot of the content that we have today and the bits and pieces that I want to talk about today are already in preparation for level 3. So I guess now that we've got a little bit of a schedule as to when level 3 will roll out and a bit more clarity from the government, we can give you some tips on how to go there. I think probably the biggest outtake out of today's presentation will be basically, do we go as a business to level 3? Do we decide to open? Because it's actually going to be quite tricky. We've got some stuff that we'll talk about later on in the piece regarding that and how to come to that decision. But basically, that, I guess, in a nutshell, is today's. We might just see if we can get in touch with. Oh, it's Heath. G'day. How you doing, Heath?
Hello, John. Good, thank you.
Oh, fantastic. Glad that you could be with us. So anyway, I was just doing a little bit of an intro. So good to see that you're on board. Hopefully Mark can join us in a minute, but I'll get back to what I was saying. So just bear with us, mate. You're good? Looking well?
I'm great. I've obviously got the similar problem to you in that I really need a haircut. So that's my big issue.
All right, mate. All right, I'll come back to you in a minute. All right, so that was Heath. So Heath's going to be talking, sharing his views a little bit later on some of the changes to businesses that are in distress. So some really interesting stuff that Heath's going to bring to the table. So I guess where we are at the moment, I guess the key thing is look, the subsidy, the wage subsidy is still very much in play. We've still got businesses that are applying for it, that have decided to wait and see what happens. And so what we're finding is that's still going through, still a fairly relatively painless process. And in fact, probably one of the key things that we have found is that people are actually wondering about the subsidy, but more so what happens if the subsidy application doesn't go very well. There is a page which I will link in the message system on the right-hand side, but basically the Work and Income website has been updated for what happens when the subsidy payment goes wrong or by accident because they've been so slow at processing that maybe the second application's gone in and they've ended up paying it twice because they haven't done a double check. So basically, if you go to the Work and Income website, I've just put a link in there. It's got a whole bunch of options around, how you can contact them if it's been paid out in error. And so the key things that they ask you for are, basically your business name, ID number, phone number, email address, etc., etc. There's an email address there that you can send them those details, and you also need to let them know the amount that you want to return to them and what caused the error. So pretty standard stuff if you were trying to give somebody some money back. in terms of the details required there. So you can jump onto that website. They also about how Gair is good, because if you have applied based on some assumptions prior to the 27th of March, say for example, look, we thought our income was going to be down and for whatever reason it wasn't, and therefore we don't qualify based on that, then you'll just have to let them know the process that you went through to try and get an understanding about what your income was likely to be. Not Mark here yet. No, Mark is still not here. All right. Part of the main reason why we wanted to get Mark on board for the call today is because what has happened is there's a couple of things that have come out. There is some regional funding that's been available, and Mark's got a lot of information about some of the additional funding that your business may be able to get, which is outside of the wage subsidy. So he's got a pretty good perspective on that and some good ideas about how to apply for that. But also because part of the government's announcements, I think it was about a week and a half ago, they announced some funding, $25 million to go through what they call a regional partner network, which is basically to help businesses with planning and strategy around trying to navigate through the difficulties that they might be having. And so Mark's done a lot of work with us, and he's actually signed up as one of the regional partners and is able to provide a lot of these services, can be at almost little to no cost. But unfortunately, Mark hasn't been able to join us today, so I'll give you a bit of a rundown. So basically what the funding is designed to do is help businesses with maybe some marketing strategy, business planning, some work around there to help them navigate the difficulties that they may be facing in lockdown, but also in post-lockdown, because their existing customers may not be there. If you think about somebody like PB Technology, they get a lot of walk-ins through the front door, but they've got a really strong online email presence, which allows them to really connect with their customers and allow trade to continue online. Not all businesses are going to have that, so being able to access somebody to give you a bit of a hand through that process could be really, really valuable. The other thing that is also to be considered is things like if you want to go to Inland Revenue or ACC, but more importantly the banks, and they need some financial forecasting, some costing, an idea about where your finances are likely to go, then accessing an advisor through this fund could actually be really, really cost effective and a requirement as part of trying to get your hands on some of those funds. So, a really, really good option for those businesses. Also, things like if you've got any issues regarding your staff, HR planning, recruitment, conflict resolution, all these sorts of things, time management. If you're struggling to find some of the answers, you can go to one of these advisors as a part of this regional support network and actually get quite a bit of help from it. So I mean, look, I think it's a fantastic initiative from the government, and we're just really lucky that we have known that Mark's actually available to be able to help businesses through that. So while he hasn't been able to join us today, I will, if anybody is interested and wants to know more about this, send me an email and I will connect you with Mark. Lance from Redhot is also doing it as well. So if you want their contact details, look, happy to provide them and make a connection there. But yeah, some really, really awesome stuff there. The key thing I think that Mark was really mentioning was you can go to the website regionalbusinesspartners.co.nz, and however the application is a lot easier if you just go and speak to either Mark or Lance directly, because they'll be able to basically shorthand the process for you. So I guess moving on, one of the things that we talked about was the maybe using that regional funding to access some support around helping you with your bank, or extending the overdraft. The bank possibly may want some figures in relation to that, but also some other quite interesting numbers that came out of it was the banks, since the government has made this announcement regarding mortgage holidays and the likes of that, there's been an estimated 100,000 adjustments to banking customers, loans facilities, banking arrangements. So these are like mortgage holidays, increases in overdrafts, moving loans and facilities onto interest only. So there's a huge amount of work that's going on in the banking sector, people on, they're basically just kind of keeping people on top of their cash flow in relation to the banking side of things. So huge amount of work there. A couple of other things that we've noticed is that there was a bank guarantee scheme that was announced by the government that's been a complete flop. However, the mortgage holidays are, and the adjustments to existing facilities are popping up and being quite well processed by the banks at the moment. Where we are seeing some real negatives from the banks, and this may be because of, I guess, the lack of competition that the lockdown has created, is they're not giving much in the way of discounts on rates. They're not being particularly they're not incentivizing people to come to their bank. Often you would get these cash incentives, for going with a particular bank, normally a percentage of the overall lend. Those things aren't happening at the moment. So yeah, it's a little bit of an interesting time from the banking side of things, but the mortgage holidays seem to be taking up quite a bit of time. Look, we still think mortgage holidays are really for those that have got a massive cash flow issue and need to match their current cash flow and the cash flow over the next maybe 6 months, looking at what their cash flow is likely to be and then matching it with their loan facilities and making sure that the two are aligned. So if you've got a massive hole in your cash flow, then you're probably going to want to look for these mortgage holidays. But what we are finding with that change to the Auckland District Law Society lease that we talked about in our previous broadcast was that most scenarios are where there's a landlord and a tenant that, due to the lockdown, can't be operating out of that premises. They're paying roughly about 50% of the lease and about 50% of the operating expenses. So that's where things are. So if you're at that 50% level, if you can't make your mortgage payments, then you should be looking at the mortgage holidays offered by the bank. So, but look, what we're going to do now is so I guess this leads on to businesses that may be in a bit of distress at the moment. So we're going to flick over and get Heath's opinion on things. Heath is the owner and director, if you can own and direct an insolvency practice in terms of things, but very knowledgeable, been in the game a long while, and is based out here and obviously takes care of business in distress all over the country. So in terms of things, Heath, I've got a couple of questions for you, mate, if you don't mind answering them. You might need to turn your mic back on.
Hello, Jono.
Yeah. So obviously, most of the people online are Boost Nest clients, but it's always good to get a perspective from somebody else. So, I guess in your experience, in terms of businesses, what are the sorts of things that you see within those businesses where they can't, what are the usual signs that they're not going to be able to pay their creditors in the near future?
I think the first thing for businesses is that understanding your position is incredibly important. So these days we've got things like Xero software, which allow businesses and business owners to be a lot more up to date in terms of what their position is. Obviously, you'll remember from the past, Jono, a bit where some business owners wouldn't actually know their position. They might get their draft financials from their accountant in October, which would tell them what their position was on 31 March. And that was about the only time that they had any idea within a 6-month window what their actual financial position was. So Xero's made that a lot easier now. But the important thing with that is we continue to reconcile and make sure everything's all up to date so that we can be making the best short-term decisions, but also more strategic long-term decisions. So like anything, it's rubbish in, rubbish out. So if we're not keeping on top of the actual position of our business, then that makes it very difficult to know where we're at. So some of the indicators that we may need to look a bit more closely at our solvency is obviously finance. If we're at the end of our overdraft, if we are going to the bank asking them for further finance, extension of overdraft, further loans, and they are declining us, then that's obviously a bit of an indication. Also, if we're dealing with our trade creditors and they're not extending credit, so if businesses end up on stock credit, cash up front, all those sorts of things, then that means it's time to maybe seek another strategy. Obviously, the next step for a creditor is issuing a statutory demand. Obviously, if we get any of those, that's really serious, because the next step after statutory demand is the liquidation application. So that is, and then obviously IRD. If we can't pay our GST or our PAYE, any of those payments, what happens next is all of the penalties and interest. And the penalties and interest, oftentimes you will have seen it a bit, Jono, too. They're quite considerable, and they can potentially become the anchor that actually grounds the ship entirely. So, and then obviously the last one, if you can't.
Yeah, definitely. We've sort of noticed that generally once those penalties and interest come back on, and IRD's applying those, then it's generally a fairly big hole in the ship.
Yeah. And then the last one is obviously if you can't pay the wages, which means you're going to struggle in the very short term to continue with the business. So all of those situations, there's obviously a person on the other side of that relationship. And so the key is when you become aware of those potential problems, then you can talk to those individual parties, whether it's going to your bank as early as possible with updated cash flows, explaining your position, whether it's with your creditors and trying to reach some sort of compromise payment plan settlement. Even the IRD, obviously they'll have a bit of sympathy at the moment. If, particularly if this was, if you're in this position just recently because of COVID. So yeah, that's some of the things to be making sure you're keeping an eye on.
Okay. Have there been any recent changes in the likes of the law in relation for dealing with creditors that might be beneficial for small business? I know they made some announcements. Can you give us a bit of an idea about what they would be and if they were going to have any benefit to small businesses?
Yeah, so far the government has announced, I think, 2 legislative changes to the Companies Act, which I believe may be happening at the end of April. The first one they've mentioned is safe harbour, which means that if the company is trading close to insolvency or insolvent, a director can't be sued for reckless trading. That was obviously lobbied, or the Directors Institute lobbied quite hard for that change. It's professional directors who are directing companies for fees and have large amount of personal assets. Obviously, very interested in that. And
so that might have had some benefit in Mainzeal. I think it was it Mainzeal where they had a bit of a stab at some of the political directors that have been online as part of the directors, and they had to go at them. So interesting change there. What else for small business?
Yeah, so just on safe harbour, there's a couple of things to be aware of around that. You need to show that the company was solvent at the end of 2019, so 31 December 2019, and that it's likely to become solvent again in 18 months. The other thing they've brought in, which I think is potentially a bit more relevant, is the debt hibernation regime. And what the debt hibernation regime allows companies to do is essentially park their debts. It's unclear at the moment whether that's just debts as at when the lockdown happened, or debts that are being incurred currently or into the future. But that allows people to park debts for 6 months as long as the creditors vote in favour of that, and so those creditors can't take action against the company.
Right. Okay. I guess that just allows them to buy a little bit more time to work things out, because I know that in terms of the commercial landlords, there's been some extensions around there as to how long or how short a time period that they can have before they cancel a lease for non-payment. I think from memory, the commercials have been extended from 10 to 30 days. Is that right? Do you remember that, Heath? Or
I think is it 10? It's 20 plus 20. 20 for the notice. I thought it was 20 for the notice. It's been doubled. 20 for the notice and then 20 for the further action.
Right. Okay. Awesome. Yeah. Other than that, I guess what are some of the options available if somebody's struggling to pay their bills? Like what I guess are their first steps in your mind as someone who's dealing with businesses that are in distress? Obviously, having a chat with the accountant, which often means me, but what are some of the other people or some of the other areas where they could get some advice and a little bit of input in order to help them work out where they need to go further?
Well, I think what obviously they need to understand their position. All of us are smarter than one of us, I think, is a pretty good thing to live by in this instance. So the more people you can talk to, the better. Starting with your accountant, because they'll understand your business better than most other people. Obviously, lawyers, legal advice. I know that there's some pretty good commercial finance brokers around as well. And obviously, we know that the banks at the moment have really tightened up and are only looking at providing funding to those people who have got very good security to provide to that. So there may be sort of second-tier options or short-term invoice finance options, all those sorts of things. And then I think obviously we'd put insolvency practitioners sort of following those sorts of people, because I think that the debt hibernation scheme that we just mentioned before, that has got the potential to be useful. It's also got the potential to have some detriments, and that if too many people take it up, or if people take it up that don't necessarily need to take it up, then that's going to put cash flow stress on already stressed suppliers or other trade creditors. I also think as well with the debt hibernation scheme, I mean, how it's been classed at the moment is that there's a threshold that you need to meet to enter it, and we've had no advice as to what that threshold might be. Then you get a moratorium for 1 month while creditors vote, and then you can get a moratorium for another 6 months. Obviously, at this stage, we don't know what the position of any secured creditors is going to be, or how that might play out. What other options people have got is there's already creditor compromises that insolvency practitioners undertake, or voluntary administration procedures. I think the benefit of going under those instead of the debt hibernation scheme is that it can allow a creditor. It can allow a company that's struggling with their debtors to actually put together a more fulsome compromise, a more longer-term compromise, rather than being sort of hamstrung by the 6-month window, because arguably what's going to have changed in 6 months, or in terms of people's cash flows, then there's some other procedures out there as well that actually allow people to, say, go to their creditors with a 3-year plan or 4-year plan, structure things a bit differently, give people more flexibility, so that you're not getting to the end of 6 months and going, oh well, heck, we've survived, but we're still not in any position to sort of repay too much of our old debt. What do we do now? And at that stage, creditors, are they in a position to then start to take action? So all of that certainty and ability to sort of plan and budget that you've gained because of that debt hibernation, you've then lost at the end of that process, whereas some of these other processes maybe can provide that certainty a lot longer into the future and allow businesses to have better strategic planning.
All right, awesome. Look, really good stuff. Hey, thank you for contributing. What we'll do is, if you can stay on the line, we've got a few questions that have come through. Look, if anybody comes up with any other points that get raised out of that, we'll come back to you. But thank you very much, Heath. That was Heath from Palliser Insolvency. Gosh, do I sound like a news presenter there? Jeepers, crazy. Anyway, so we'll move on. Mark from Redhot is actually connected, although due to technical difficulties. I can't seem to locate him in the number of people that are connected. So yeah, anyway, we will endeavour to try and work in behind the scenes and try and get him back on, but it's a little bit hard to do two at once. So the other thing that were announced about the same time that about the safe harbour and those other initiatives in terms of the government dealing with business was they talked about a bunch of tax changes. So I'll run through those at this stage. Look, I guess what seemed to be a little frustrating was these were ideas that the government's had for the last 3 or 4 years, and Treasury and the Finance and Expenditure Committee have probably been floating around for 10. And all they've done is they've really brought these ideas back up. They haven't necessarily had any thought, any consultation, or even have any legislation in mind to roll out. But basically, you know, there's not really a lot of detail around here. So coming up with some ways that these tax changes might be used could be a little bit difficult. The things that we do know is that provisional tax for the year that is just finished, being 2020, is still due on the 7th of May. There's been no change to that. The government has and is looking at changing the legislation to allow IRD to change payment dates and filing dates for the next 18 months. At the moment, IRD's got no ability, and neither does the government, unless they change the legislation, to change when tax payments and you know, tax filing dates are due. They just can't be changed at the moment. So that is one of the things that they are looking, that we know is in the pipeline and will probably go through. One of the things that they have talked about is a loss carried back. So in simple terms, it means if you've had a profit the year before and you have a loss in the most current year, is you can take that loss and you can offset it against the year before and get a refund. When is this going to apply? How are you going to be able to skip years in between? We don't know, but basically what has been communicated at this stage is if you make a loss in the tax year that's just finished, you'll be able to offset that against a profit in 2019 tax year. And if that means a refund, IRD will refund you the money. That's pretty much all we've got at this stage. But look, there are some real, I guess, hooks as part of this. Is most of the time we pay working shareholders within a business a salary, but it seems unlikely that if we pay you a salary and leave very little profit in your operating company, that we'll be able to adjust that shareholder's salaries. And the main reasons for that is there's just too many flow-on effects. If you go back a year and change somebody's salary, which you know, is a paper salary, for lack of a better term, it's got huge flow-on effects. Calculation, all these sorts of things, you know, banking finance, you know, all of these things may depend on those salary and those profit numbers. So it will be really interesting to see how these come together, simply because of the flow-on effects being so significant. The other couple of things that they have talked about is changing what is often referred to as the shareholder continuity, which basically means, you know, the number of people that own a company each year can't really change that much and keep their losses rolling forward. And this was a concept that was brought out of the 90s, because what was happening prior to the 87 crash were with a whole bunch of these companies were making profits and some companies were making losses. And what was happening was there was buying and selling of these companies in order to basically pay less tax. So a company which had made a profit would go and buy a company which had made a loss. The two would get sandwiched together and then they'd pay tax on the net amount. So the current rules are designed to prevent that from happening, and what the government's looking at doing is adjusting those rules and allowing stuff like that to happen. So I guess their goal is really, you know, because getting finance from a bank could be really difficult in the next 12 to 24 months, they're thinking, hey, look, if we've got some people that have got some money and they want to invest in a business, then this is a good way of promoting that, rather than having to set up a whole new structure and maybe not access some of those previous losses. So look, don't really know how that's going to work, but hey, look, it could work for some of our clients in really, really good fashion. Certainly the ones that are going to need some equity and looking at taking on partners could be really, really good. A number of other scenarios, you know, just, if it's day in, day in for the mechanic down the road, neither of those are really going to be that useful for them. The other thing that IID announced was that they're going to kind of make things easier, but also keep things difficult. We got some really mixed messages from Inland Revenue in the last couple of weeks regarding, look, if you can't pay your tax, the statement from IID was, hey, contact us as soon as practically possible, but not right now. I mean, I don't know what that means. I mean, look, I'm an accountant, that confuses me, but basically what they've said is, hey, look, we are going to entertain people that can't pay tax and writing off their penalties, writing off their interest. And we're going to make it as easy as possible. But of course, we can't be giving away money. So we're also going to make it as difficult as possible. So they've given a little bit of insight of the type of information that they're going to want to kind of consider writing off any penalties and interest if you can't pay your tax. But basically, they're pretty easy. If you can't pay your tax, it must be because of COVID-19, not because you can't be bothered. Being number one, they're probably going to want 3 months bank statements. Coming back to what Heath was saying before, they're going to want some management reports. So your accounting system's going to have to be up to date. You're going to have to give them some profit and loss figures, balance sheets, debtors and creditors, all this information, which I think, if you can't do that internally within your business easily, and you have to get somebody to help you with, could negate the benefit that you might be getting from an interest or a penalties write-off. Look, we're always here to help, and likewise, putting an application in may be something that can be done through the regional partners support that we talked about earlier. That could be an option as well. To try and get a little bit of a handle on things. But, look, IID said they want to make it easy, but also we want to make it difficult at the same time. So it won't be a similar sort of thing that MSD rolled out for the wage subsidy, which is, hey, look, fill in this form, hit send, and we'll write off your penalties and interest. You've got to send us a message. You've got to send us some information. We're going to have to give it to somebody somewhere. They're going to go through it. They're going to have to send it to somebody else, and then maybe it'll be approved. So, look, at this stage, if you can, please pay your tax, please pay your POE and your GST. Those are the really, really important ones. POE still has a criminal punishment for it, which is still a little bit over the top of my mind. But anyway, pretty much the last topic that we have got on the cards for today is level 3 and how do you work out whether you're open for business or not. Look, I mean, my wife's really challenged me on it because, I really wanted to, I want to open the office back up as soon as possible. I think it's good, not necessarily for the business itself, but for our team, the social element of coming together. Accountants often are often very much creatures of habit, and not being able to go to the office is certainly a curveball. But Level 3 is going to pose some challenges. If you caught the Prime Minister's address yesterday, look, they still want people to stay at home and work from home and educate from home if they can. Look, and for our business, that's something that we can do, albeit a little bit more laboured, a little bit more difficult, mainly just because of the social pressures at home more than anything else. But I think for a number of businesses, it's going to be a really marginal decision to return to work at level 3. And the key element to that is really because of the cost of implementing the appropriate and required health and safety measures. Look, we have seen some documents that are being batted about in order to allow some organisations, some bigger organisations, to return to work, and the amount of effort that's going into their planning documents. Look, the resources just aren't there for smaller business. So, look, I'll take a fairly simple example on a building site, and this is why I think big construction may go back, but then again, they may not. So say, for example, you've got a building site, you're building an apartment tower, maybe 10, 15 stories high, and it's got a handrail on one of the stairwells leading up to, say, level 1, level 2, whatever. That handrail, that one piece of equipment within that building site, will need to be regularly sterilised. Not only will it need to be sterilised and cleaned and soaked with, the sanitizer, but you're also going to have to keep a schedule recording that the cleaning's been done. So if you think about this, and just about every surface that you would have in a building site where there are multiple people potentially going to interact with that surface, it just turns into a nightmare. Now, look, that could be a little bit over the top, but from what I gather, that's what they're going to want to see. You're not going to be able to carpool your team to work, so there's no carpooling. You're going to need to bring your own lunch, which, hey, look, for the builders and the tradies, not a big deal. But for a lot of the office workers and those that actually leave home, you know, they'll struggle to go down to the local cafe and pick up a scone if they're hungry. So there's those elements there. You know, and even if those, you know, the cafes and the likes are open, they may not actually be stocked. So there's huge risks there in terms of being compliant. But yeah, the amount of information that will need to be collected by employers, you know, in scenarios is actually quite huge. The other key thing is if everybody's working from home, there's less responsibility on an employer, because really it's really difficult for them to look at the home as a work environment and therefore needing to manage it from health and safety to a degree. But as soon as you open up a workspace, a work site, or a venue where your employees are, you're now taking on all that responsibility of health and safety, which is actually a little bit mitigated from people working from home. So there's a huge element there where you're kind of saying, well, look, it could be actually quite difficult. Look, where I see the economy opening up, as I see, and they've already talked about it, is the guys in forestry. Look, those guys have been shut down, for a good chunk of them, for almost 4 months now. They were out of lockdown well before, they went into the equivalent of the lockdown well before the rest of New Zealand, because there was a huge backlog of logs. It just wasn't being shipped off, so there was no work for them. Those guys going back to work. Guys where there might only be one or two on a building site, you know, they might be doing a doing a new build, there might only be one or two of them. I think those guys will be able to return and be able to control that site in a way that there's not going to be too many issues. But, you know, if you're looking at maybe a 3 or 4 townhouse development and you've got, you know, 5 or 6 subbies on there, you've got 3 or 4 of your own guys, I think it's going to be pretty difficult for that project to come back online at level 3. But hey, look, could be wrong. In terms of Boost Nest, we are probably going to reoccupy the office at level 3. But how we're going to do it is we might only have one person there at a time. And the key element to that is we're still doing a lot of work which is paper-based, and a lot of stuff is still coming in via the mail. And unfortunately, it's created a little bit of a kink in our production line for getting tax work and GST work working. So that's the driver for us coming back. But yeah, it's still quite interesting. It'd be interesting to see with the Bunnings, which I think for a number of our clients, Bunnings and Mitre 10s being closed has been a real bugger, because, you know, things that they'd normally do at home, they haven't been able to get their hands on the materials. So it'll be interesting. One comparison is Queensland and Australia is already at level 3. Very similar numbers from New Zealand in terms of population base, infections, death rate, very similar. The only difference really being is the geographical spread. Of course, Queensland's absolutely massive, and I think that has probably been one of the natural barriers which has really allowed them to be at level 3. But I mean, Bunnings is open in Queensland. I'm pretty sure KFC's open over there, even though apparently KFC's not paying the rent. But yeah, so I think for a lot of businesses it's going to be quite difficult. We've actually, as I was saying, we've actually managed to come across a document here which is being used by bigger organisations, obviously due to privacy and intellectual property. I'm not going to display it or share it as part of the webcast, but I'm going to run through a few of the issues that they've identified as part of being operational at level 3. This is, I think, version 3 or 4, and it's already 8 pages with pictures and diagrams and all that sort of stuff. So I mean, look, the first and foremost is you and your family first. I mean, such a key point and a key message from Jacinda. But what they're talking about here is you know, stopping the spread, so preventing it being spread at home, or being brought into the home by when you get home, you basically strip off, clothes go straight into the washing machine, shoes don't come inside, anything that you have taken onto the work site to be cleaned pretty much as soon as you get into the house. And also, and this is probably the kicker for me, is almost they've also suggested a shower. So can you imagine you come home, and I don't know what the builders are like, they're probably the first thing they do is they head to the fridge and grab a beer. But thinking about a site or a work environment where you may be cross-connecting on services, to then come home and say, don't hug the kids when you first get in the door, take your shoes off, put all your clothes and any other things that you've taken to work in the washing machine, and then go have a shower. Pretty extreme. And I think this is where the kind of while this might be going to the nth degree, is also a consideration. You know, these are things that you need to know. And have the team educated on. So I mean, look, think about how the supermarkets have radically changed the shopping experience. You know, that kind of transformation may be required. You'll need to have some guidelines on how to protect yourself and others in the workplace. So like rubbish bins, coughing etiquette. You'll need to have a surface cleaning plan. You know, in our office, we've got a coffee machine, which could be, you know, we may not be able to use because from a contamination point of view, could be too centralised for the transmission. So the coffee machine might be out. You know, how do you identify if you're sick? You know, what are the symptoms of sick? How do you establish whether you're going to stay at home or not? You know, some plans around what happens when you turn up on site. You're going to need some hand sanitizer. You're going to need some PPE, which is protective stuff. You're going to need some protective stuff. That's what you're going to need. That's the technical accounting term. You're going to need some of that available for them. Are you able to source that this week? Is it able to be delivered in time for work to start on Tuesday, Wednesday next week? Don't know. I'd imagine there's going to be a run. It's going to be difficult. You know, we're going to have, you know, sign-in protocols. You know, if you're thinking about an office environment where you've got those little buzzy thingies, you know, are you going to have somebody there making sure that that thing is, that buzzy thingy to let you into the building is going to be cleaned every time somebody goes in and out? You know, these are some of the, you know, sorts of things that you may, you know, you may have to think about. Also, but probably the most important is understanding who's going to be there. And when. So one of the things that we talked about was a schedule, understanding about who was going to be at the office, who and when, all that kind of stuff, but also how they're getting there. If anybody's going to be on public transport, that's a no-no. They can't turn up. So you're going to have to create like a contact tracing information schedule or chart, which records what the day is, who the person is, are they going to be on site or are they not going to be on site, the time that they arrive, the time that they leave, the people that they have travelled with, how they've travelled, you know, have they used public transport, have they driven themselves in, their contact number, their emergency contact number. You're going to need to get an idea about who they interact with throughout the day while they're on your site. And obviously the time that they arrived and the time that they left. So I mean, all this information is going to be recorded. So look, for a 7-person team such as ourselves, I think we could do it. But I mean, imagine a small building site where you're building maybe two townhouses with 15, 20 people. Look, there's going to be some of these systems already in place, but to expand that out further for a full contact tracing schedule, I think it's going to be really difficult. So look, first question since the last lot of questions is, for provisional tax going forward, will we be able to adjust this based on business net profit for that period rather than instalments being fixed on 2020 March financials? Well, yeah, basically what ID said was we don't want you to rush to try and adjust your provisional tax. They do have a problem in the sense that if you go past 7th of May, when your payment was due, it's very difficult for them to adjust what your provisional tax assessment was for the year. But I believe, as part of that change that I talked about earlier, they're going to be able to do that. Provisional tax is a quirky one. So if you're going to pay more than $60,000 worth of tax, there can be an adjustment to work out what your actual tax bill is, and that's generally what we do when we send out the last provisional tax notices. So what we're actually in the process of doing now is going through everybody's Xero that we have online and going through and getting an idea about where their current profit sits and if that's markedly different from where things have been sitting. And if it is, then we will tell you what you need to pay, and that will get you over that hurdle in terms of that. Look, if you normally pay more than 60K worth of tax and you're not on Xero, the best advice that I can say is, look, get your spreadsheets, get your info into us, and we'll have a look at it and we'll give you a number. The next provisional tax won't be until August, which is a little bit more of a difficult one because we've got less information to make an assessment on. But yeah, the other element is look, if you miss that payment, IID is also saying, hey, look, we will be able to make an allowance and reduce the penalties and interest on that. Next question. If your business is making a loss going forward for the possible next 6 months, will we have to pay provisional tax even though through March 2020 you've made a profit? Look, really good question. Provisional tax should always be based on your profit that you're making that year, and that's what we try and do when we send out those notices. There are elements where we simply use the IID calculation, but most of the time we're trying to tie it to the income and the profit that you're making so far. So, but the issue will be, of course, when you don't make any money in the first 6 months, and then suddenly you make a big profit in the last 6 months. That's when there'll be a bit of a wrinkle. But look, we'll do our best to try and sort that out for you. Kevin has just corrected me. It's protective personal equipment. I'll have to try and remember that. The accountant terminology for PP and E is property, plant and equipment, which is a fixed asset, which is a thing that we keep getting, one thing that we keep getting bashed into when we're at university as to what PPE stands for. Look, I haven't been able to get Mark online, but he has sent me through some pretty, one message that he wants me to communicate here is that this, I'll read out his exact message. One key thing to pass on to people about the support is that we, as in Redhot, can provide it 100% funded by the government. So you can actually go see Mark and Lance and get basically 100% funding for their cost, their time, their advice, their wealth of knowledge. There was a scenario prior to this announcement where they could get about 50%, but it's pretty much, obviously there's a $25 million budget. So now I would be looking at saying, hey, look, if you're interested, you think that's going to benefit your business, get in touch with Mark and Lance. I'll put their details in the box now, or if you missed that, send me an email and I will connect you directly, like I said earlier. But look, we've had a number of clients that have worked with both Mark and Lance over the last few years, and look, they've had tremendous success. And coming back to what Heath was saying, you know, you've got to be on top of your business, and generally Mark and Lance are asking the questions, you know, what's happening in 3 months, what's happening in 6 months time, and taught me a lot on my own about asking these sorts of questions. So look, you know, waiting for the accountant to tell you that you're in jeopardy is a bit of Russian roulette. But Mark and Lance will be able to get you on the right track and give you a hand, not only with forecasting what you need to do for your business, but also making sure that you're managing tasks, prioritising tasks, and looking after your staff the best. So look, 100% finance from the government for Redhot, so that's actually pretty good. Had a question here. Have the government actually requested that you have this COVID plan in place in order to operate? The answer is probably no. However, there is an expectation that businesses operate and employ and provide a safe workspace. And so basically the businesses are basically being caught under that umbrella. So you would be very open to prosecution if you didn't put some measures in place in order to secure your workspace and make sure that your team are covered and looked after, and make sure you mitigate the spread. I mean, also think about it from a PR perspective. Hey, look, you could just see it now. Business fails to protect employees. 15 new cases, one new grouping, or what do they call it? Cluster. One new cluster, thanks to Steve Smith Building Limited. You could see how that would go down from a PR point of view. So, look, if there's any hesitations, don't open. Try and work it out online. But yeah. So as Andrew's just pointed out, it is part of your health and safety expectations of your company, and pretty much basically what we were saying. And so, look, Mark's just said pretty much everything. If there's anything else that you need to know about the funding, give us a call, and we'll connect you with Mark and Lance. One question here for Heath. I know he's been hanging around in the background, waiting in case he got called back off the bench. We've got a question here. I wonder if the debt hibernation might apply to bank loans. Heath, can you give us a little bit of input on this? It's a little bit off the cuff. How do you think the banks will be looking at the hibernation? And just remember, your mic is on mute.
Hey, Jono. Thanks for having me back. So in terms of the debt hibernation and the bank loans, there is talk at the moment that general security agreement holders may sit outside of the debt hibernation scheme. So they may have the ability.
So what do you mean by that? What type of general security?
So if the bank's got a general security agreement that provides them security over the assets of the company, then they may be able to act independently of the compromise, whether or not, so you might get 51% of credit vote in favour holder can still take steps to realise, and that would be in line with other proposals or avoidable administration scheme. So the important thing is always to make sure that you're someone else, or more so, and that when you're presenting a plan, you're obviously wanting to know whether they're on board first, because if they're not on board, then there's past the thing as well. It would depend on what the bank's level of debt is, because banks are reluctant to take action themselves in terms of appointing a receiver. And it'd have to be quite substantial debt that they're owed, and they would have to consider that the assets are at risk. So the one thing is, yes, you're going to need to get the bank if they've got the general security agreement separately, but the other thing is that they won't want to take action themselves, and they won't want to be seen to be, this particular bank was, appointing a receiver to this, small business that's been damaged by COVID and, the big bad wolf. So, I would, like anyone else, you really got to keep them informed. But
so how would somebody know if they've got they're in that situation where the bank is guaranteed? Would they normally search the personal property securities register? Is that probably the best way to see what they've got outstanding?
Correct. You will have obviously had to have signed an actual general security deed to provide that to the banks, but that may have been a long time ago and you might not recall because you signed a lot of paperwork. So the best place would be to search the personal property securities register, particularly if you are thinking about going through this, it would be good just to search that to see what other companies, creditors or suppliers are claiming security interests, because at this stage we don't know whether they are going to sit outside the debt hibernation scheme either, or whether the moratorium is going to apply to them. So for example, if I am trading a cafe and I've got my fridge full of Coca-Cola Amatil product, then I want to know whether they're claiming a security interest, because if I go through the debt hibernation scheme and they can still take action, then they can just come and get all the stock out of my fridge, which is going to inhibit my ability to continue to trade. So yes, that's the Personal Property Securities Register, PPSR.
All right, thanks, Heath. I've actually put a link to the PPSR register in the little messenger thing there. But likewise, if you, it's always a good thing for a business to do a PPSR search maybe every couple of years, because certainly in the office world, you often sign up for, like a printer or a photocopier or, a credit account with Office Max or something like that. And often those forms, they won't give you anything until you sign them. But the legal repercussions of that is basically your business and you get your name on this little website thingy here, which gives them access to anything that you've bought from them in priority to any other creditors. So it's always good to make sure that those things aren't floating out the wind a little bit. And if they are, and you're no longer using them as a supplier, then tell them to release it. So yeah, so really good. But thanks very much, Heath. Appreciate your input on that. Look, that's pretty much everything that we have got on today's agenda. Thank you very much for turning up. It was probably a little more technical and I guess a little bit more detail focused in the last broadcast that we had. Look, if you've got any feedback, whether it's timing or anything like that, please let me know. Look, we're pretty new to this. As you can see, we had some really good ideas about getting some guest speakers in and the likes of that, just to cover off some of those technical elements. But look, we'd really like some feedback on how we did, and if there's anything else that you want us to talk about, or something like that, send me an email and we can go from there. But hey, thank you very much for taking time out of your day. And look, if there's anything that we can help with, send us an email and we can connect you with Mark and Lance as well if you want some help in that arena. But also if you want, if you're worried about some of your creditors and how to deal with them, you can contact Heath and he'll give you a little bit of insight as to what's the best approach for them. So look, as Jacinda says, go hard, go early. So it's always best, two heads are better than one. So look, and look, we've relied on Heath for a lot of his advice and his input on a number of issues that we've had for some of our clients as well. It's been invaluable. So look, hey, yeah, other than that, have a great afternoon. Hopefully you guys can stop listening to the accountants and the lawyers and go and enjoy the sun. Thank you once again, Heath, for tuning up, mate. I owe you some beers, mate. Take it easy.